Hi, everybody. Welcome to the latest Carson's Take 5 with Ryan and Sonu. Sonu, usually I'm taller than you.
Yeah, I'm standing up just to equalize,
We thought
normalize things.
we'd have some fun, and Sonu's taller with you today. But welcome again to the latest Carson's Take 5. We're talking about inflation and jobs. What's the title? We didn't come up with a title yet. The title will be, how about this? Inflation continues to improve. That's today's title, made on the fly. Sonu, we're recording this from out in California. Where are we? What's behind us there?
We are in Orange County at a place called the Shake Shack, which is now, I think we could say it's kind of like a regular place for us.
We did not get milkshakes. It's breakfast time, but we were here yesterday and got some milkshakes and some food. But listen, you don't care about our dietary needs, although we like to share them. Yeah. We're here, Sonu, to talk about some inflation data. Just this morning as we're doing this, CPI, Consumer Price Index, came in a lot better than expected. Maybe not for you, because you've been expecting improvement, but finally we're seeing it, and the market's reaction. It's early, yes, but it looks like new all-time highs are coming. What did you find in today's inflation data?
Look, we were expecting the disinflation process that we got in the second half of last year to continue to this year, but Q1, the first quarter, inflation came in harder than expected, but that was because of what I call like idiosyncratic reasons, right? Yeah. Shelter, we saw housing inflation, which by the way has nothing to do with home prices. We saw that go up for, seasonal issues, seasonal factors, as they call it. They like to adjust for seasonality, but, it doesn't always work out that way. Then auto insurance, right? That spiked in the first quarter. That's reversed in a big way over the last, month, which is May, the numbers you just got. So overall, we've seen a lot of improvement, and I would say we're back on track with respect to the narrative of the disinflation process continuing.
So you think about it then, what does that mean for the listeners, right? Well, listen, what we're seeing initially, small caps, mid caps, the market is broadening out. We all know some of the big tech names have done amazing, right? One of the knocks this market soda has been, listen, it hasn't been broad participation. If you start to see inflation coming back, the Fed likely cuts. We'll talk about the Fed here next. Yep. But what does it mean for investors? Again, listening, we are seeing broadening out. So you don't have to just be in these big tech names. There's a lot of other areas. We've talked before about small caps and mid caps, fairly reasonably valued. Yes, tech names have done great. We're not saying you shouldn't own some tech, but they are pricey. So it's a pretty high bar. So now, Sonu, let's put this full circle. If inflation's lower, maybe the Fed's going to cut. And again, that can help this overall bull market that we're in continue to broaden out. So when's the first Fed cut, you think, after what you've seen so far this morning?
I think September. Look, the Fed tells us, irrespective of what happens at for that matter, the June Fed meeting, which is on today, the day we are recording, it's happening as we speak probably. The July Fed meeting, I don't think they're going to cut rates today or in July. But I think the process, they say they're data dependent. Well, look at the data. The data says disinflation is happening. So I think we get two cuts, with the first one maybe in September.
So this is an important concept because we hear this a lot with clients. We talk about inflation. I mean, things are still more expensive. We understand it. Go to the grocery store, go out. Things are more pricey than you saw a year ago. In all likelihood. But what the Fed looks at, what the market looks at, is month-over-month numbers. We're not going to get too in the weeds on this, but Sonu, we've seen some major improvements month-over-month the last couple months. You want to talk about maybe like food? Food. Let's talk about food. Food prices, restaurant prices, that's the stuff that people obviously use and pay for. You saw some improvements there just month-over-month, right?
Yeah, when we talk about the Fed and inflation, it's easy, because the Fed focuses on core inflation, excluding food and energy. But for all of us, we're sitting at a restaurant here. For all of us, food and energy.
There's a heater on right there. And
there's energy.
There's energy in food.
We love California weather back in Chicago and Cincinnati. I mean, California is like dull and gray right now. But no, food prices were flat in May, right? Month over month. April to May, food prices were flat. 0% increase, right? And energy prices have been going down. Gas prices have been going down. Electricity prices have been flat, slightly negative in April and May. So that's positive for household incomes, which means inflation-adjusted incomes are going higher. Why does that matter? Because where does consumption come from? Incomes, right? And what's the U.S. economy mostly made up of? Consumption. So all in all, I think we're in a good place.
Yeah, you think about it again, we won't get too into this as I see we've only got about a minute or so. We just saw some recent employment data last week. We continue to create, over 200,000 jobs.
Yeah, 200,000. Last 3 months, we've averaged about 249,000 jobs.
And Sonu's pointed this out before, but for context, 2019, a pretty good year for the economy, also for the stock market. Average, I want to say, only 166,000 jobs a month in 2019. Now we're well over 200,000 consistently. Again, if people are getting jobs, if people are out there working, participation, if you want a job, you likely can find a job. The highest levels we've seen in prime age workers, almost in 20 years. Bottom line, keep it simple. People are working. Incomes are still stronger than inflation. Inflation's coming back. Incomes might start to come back a little bit if inflation does, but overall, real incomes continue to be strong. Sonu, I think we're at about the end here. Any final comments? And then I'll bring us home.
No, I think there's no need to be on recession watch with the numbers we've gotten. I mean, if people have been talking about the economy slowing, maybe slowing into a recession, we've always said that the economy is just normalizing. I think we're there. Maybe the economy is growing along trend, maybe slightly above trend, but that's not a bad place to be at.
No, it's not. And inflation's improving, economy's strong. We just finished up earnings season, looking at record earnings on the S&P 500, and we're also starting to see more broadening out as you go out a year or so with small caps and mid cap earnings expected to improve. All in all, there are worries, there are concerns. If you followed us on these Carson Take 5s for a while now, we've been saying, listen, this is a bull market. There's not a recession coming. We're still saying that, even though we're sitting out here in California. Our views have not changed on the word out here in California, although hopefully the sun shows up soon enough, but that's all right. Everybody, I hope you enjoyed this latest Carson's Take 5. We'll see you next week. Thank you.